All right, welcome back for the episode of Carnivore Trades. Today is Friday, October 13th, 2023. If you're not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So, spooky session here, Friday the 13th. And markets definitely spooked a little bit here. Triple Q's down 1.25. Spiders down 0.5%. The Dow managed to eke out a 48-cent gain on the DIA and the Russell. Getting hammered again. That probably needs to go test 165, which we'll talk about in a minute here. Lots of headlines. We did have some economic data this morning. So we had export-import prices. The import prices ex oil came in way colder than expected. The market got a nice bid off of that. And then University of Michigan consumer sentiment came out at 10 a.m. And, it was kind of honestly, it was a little bit of a colder of a print, 63 versus 67.50, but markets sold off anyway. So it was kind of a gap and crap day. The big headline, obviously, is that now, there's geopolitical tensions, but it looks like at this point, the ground invasion of Gaza is imminent per Politico. And so that continued to kind of spook markets. Now, and as you can see here, big winners on the day, gold, take a look at that. Crude oil, obviously big pop, silver, and even bonds getting a bid, which that should happen if there is geopolitical tensions like that. But typically the rule of thumb, the narrative is, or not the narrative, but the rule of thumb is you want to buy the invasion. That doesn't mean you can't have a good sell. Usually there's a good flush because of uncertainty, but I talked about this last week. Again, when we gapped down Monday, I said, look, it's generally a buy the dip kind of mentality. Same thing with the Ukraine invasion, right? Big sell and then a nice squeeze up. That doesn't mean that low is going to hold for the next decade or anything. It just means that usually you're going to get some type of a bounce there. Why? Well, bond yields come in. The market is really, that's all the market cares about right now is bond yields. And bond yields came in. And also, it generally, why do they come in? Well, A, it's a safety trade, but B, the central banks are a lot more dovish when you have serious geopolitical tensions like war, for instance. They're not going to throw gasoline on the fire when there's this kind of uncertainty. So generally, you're going to get that dovish tone out of central banks. Could make them back off a little bit. They don't want to. The market's already stressed enough. The economy's already stressed enough when it comes to war and things of that nature. So they tend to back off a little bit. That said, obviously we were red today, but let's say we gap down Monday. Could that be a buy the dip opportunity? It certainly could. So just keep that in mind. But right now, markets were lower. And a couple of things we got to talk about. One is that we did get back above this pivot. Remember, obviously, everyone in the world, even the person who doesn't know anything about technical analysis, knows there was a head and shoulder pattern that got negated on Wednesday. And we closed back below. So I'm just going off of this low pivot now. Because it's still a trend line, it's still a point of control, and the same thing on the SPX there, the August lows, they're important to me. So I hold a lot of weight there. And if we look at where we closed today, you can see we had a weekly close back below that. So bulls have not been able to break us back above that, despite negating that daily chart pattern. That's why I said, look, the head and shoulder, don't put too much behind it, right? It was probably never going to play out to target. There was too many eyes on it, but that doesn't mean that the market can't go down, right? It just negates that particular pattern. And you can make a case that, they needed to make this pattern fail in order for it to go down. I showed you guys AAII sentiment yesterday. It was 30% right here, 30% bulls, and it was 40% right here. That is a massive jump. And it only took 4 days to do that. So you kind of get these, you get these bulls on board. Oh, that's it. The head and shoulder failed. We're going up to, everybody talking about end of year rally. And, you get 2 down days. So, and closing back below this trend line. So something to keep an eye on. Another thing to keep an eye on. I talked about this a lot yesterday. Triple Qs, 618. And that trend line. I mean, that's as picture perfect as it's going to get, right? So I think short term, the Q's got to go test 360 and 362. That's a level I'm watching. SPX, I'm going to say 42.80, possibly 42.70 if you guys follow the spiders. I'm looking at 426 to 428. Okay. So if we hit that early next week, I would expect a bounce there. And then really what happens after that kind of determines what we're going to do for the next, several weeks. If we can take out the highs here, let me just clean this up. And get my right tools. If we come in here and we take out the highs, then the lows are likely in for the remainder of the year. If that fails, this level fails right around 426, 425, I think we go down and we probably have to test 415. I talked about this, back last week. I said there's a very good possibility of 1, 2, 3, 4, and then a last wave down. I've traded through the 200 moving average countless times in my life. I know how they do this. This happens all the time. They'll get it very close to the 200. They'll pump it up, and then you don't get the bulls out by doing this. You get the bulls out of the market by breaking that and getting us down to here. The bulls will capitulate and the bears will jump on board, and that's how you get your end of the year rally. So that's something I'm going to be watching for. That's certainly a scenario. That's assuming we don't, put in a higher low at some point next week. And if we do make a higher low, it's important to follow through and take out the highs. Because if you put in a higher low and then a lower high, you can still go back down. So those are the two scenarios I'm watching going into next week, but watch those levels that I just gave out to you. So, and then for the Qs, again, 360, 362 here in the short term, I think it needs to get hit. IWM, I think regardless of what happens on the spiders, I think this is going to 165. We had a nice tag and tank setup, extended move into the 20 MA, and that acted as resistance. It's a matter of time, I think, before you take out these lows. I mean, yeah, they could defend it, but I'm not going to give it the benefit of the doubt because it isn't giving me a reason to give it the benefit of the doubt. And nothing to say that head and shoulder don't play out to 165. So watch that. That's not even a buy level, by the way. That's just a target. It is kind of like a triple bottom. And, maybe it holds, but, it could also hold, go back up here, and then really dump out. So just be aware of that. But Russell 2000, that's what I'm looking for. And then not too distant future. The Dow also, that head and shoulder still is in play as well, down to 325. And again, stalling out at that 200 moving average. But this is kind of flagging, right? And Dow finally acting like it should in a little risk-off type environment by being green in a down market. Again, we talked about this, right? TLT, GLD. I made a big stink about it the other day. GLD, TLT, XLU, take a look at XLU today. That was green and a down tape. XLP, that was green and down tape. These are risk-off sectors acting well like they should in a risk-off environment, in an environment where bonds are the actual risk-off and not just the dollar index. By the way, the dollar was green today too. But in any case, the Dow acting like a little bit of risk-off. UNH reporting earnings, that's going to take the Dow up every time. If they're, green 2.64%, it's a biggest component of the Dow. So good earnings say that actually has quite a bit of resistance up here though. In any case, moving on. We'll talk about the banks in a minute, but SMH down 2.5%. So closing right back on that little trend line there. I don't know how much, I love the trend line anymore. But for what it's worth, it closed right on that and back below 150. I talked about 153 being resistance. You got through it yesterday, and then we backed off today. Weekly candle, rejecting that 20-week moving average. It's not dead in the water, but you do have lower highs here, so be aware of that. And if you take out this pivot, it's going to 129, as you guys know. IGV finally backing off as well. Again, this still has room for a higher low, so we'll watch it at this trend line again. That's probably where it's going to want to go test. I would say horizontal support is going to be right around 341 to 340. So that's where you broke out right there after that little 3-day consolidation, big surge. So that's where the money is likely sitting. Might be some short-term support there at 345, but IGV still holding up okay. Got to watch that one too for lower highs as well. Don't want to see it take out these lows here, otherwise this can go lower. Dow Transport just can't get out of their own way. You had a nice move here. You had a nice chance to roll, put in like a little zigzag. And I guess you could shoot for a higher low on Monday, but there is not a lot of room here.
The transports take out these lows, especially on a weekly close. It's down to 14,000. And again, you didn't even get a 1 week bounce off of this. I mean, that's a 50 and 100 moving average necktie on the weekly. That should give you a bounce, and you didn't even bounce for a full week. So transport's still weak. Again, they're kind of a victim right now of energy prices continuing to hold up. Crude just saying, screw you, essentially. And I still don't think that gets past 90 here in the short term, but it is a big bid, and it's weighing down on the DJT. To recover, you got to get back above this high, and then you can go to 15.5. But again, on the downside, you don't want to take this out, because then it's down to 14K. All right, let's get over to interest rates here. And as per usual, we'll start off with the 2-year. So that's still back above 5%. And that's another weekly close above 5%. I think if you can get, you're still holding trend here on the weekly. This still looks really strong. Again, war is very inflationary. Keep that in mind. But again, in the short run, bonds can get a risk-off bid. And you see the 2-year was negative today. But again, trend is up. It's holding up just fine. The 5-year is holding up as well, as is the 10, holding that 20 moving average. I still think bonds are probably due, at least the 10 and the 30 are due for some type of a back test here of 435. And on the 30-year, 445, 450. The yields did come in a little bit here. You got to get below this green bar here to initiate a move down to that 445, 450 area. Anyways, over to XHB. That got hit a little bit today, but not as much as a lot of other things. Actually closed above yesterday's low, so that's a short-term positive, but you still have those lower highs, and there's weekly lower highs as well. If you start to lose this pivot here, again, you guys know I'm looking at $70 on the XHB. That's my level for home builders right now. Again, that's not a buy level. It could be a buy level, but that's just a downside objective right now, so just be aware of that. This 200 moving average, this is not major. Okay, so we got there. We consolidated for 3-4 days. Then we rolled over a lower high. Don't buy into it right now. So it can go through that. Just be aware. VNQ, you got your weekly close back above the double bottom. So a little golf clap for VNQ, but it's not much, right? It's just barely hanging on by a thread here. The only positive I see for REITs right now is that it's so hated that maybe the worst is priced in. That's really the only thing I can see, and sometimes that's enough. So don't discount it, but again, the chart is terrible, and I would avoid it. All right, XLF on the day. Wow. So XLF managing to close up 7 cents, but that doesn't tell the story. We did basically test, I could probably draw this trend line in a little differently. We could probably do this now. So we'll just say it tested that, okay? But take a look at JPM. Not a good candle. So you gap up into a lower high on earnings and faded that whole move. Take a look at Citigroup. They reported today. This is an ugly, ugly candle there on Citigroup. Wells Fargo, that managed to hold some of the gains here. But again, a lot of resistance up here in this zone. So banks kind of mixed. They are getting a little bit of a short squeeze bid, but I was just talking to my members about this, but looking at KBWB, this is just not strong. That's, a weekly bear pattern, right? So who knows? Maybe it could trade up to the upper end of this range one more time. If you get a short squeeze, something of that nature, but this is just not good, and it's not a good picture for our financial system. Keep an eye on credit spreads too, because I think we're at that point now. KRE rolling over, not a good look, down 2%. You can't lose this pivot. If we lose this pivot, there's some serious problems in the market. KBE, same thing. We can't lose that pivot. Big problems. Broker dealers, lower on the day, holding the 200 moving average. Won't make too much out of it. If we take out this low, your next level is 460. If you get through that, it's really all the way down to 450. So just be aware of that. But now weekly lower highs on the broker dealers. So keep that in mind. Oil, we touched on briefly already, up almost 6% there. Big power move. I still don't see this getting much through 90, just in the short run. Just so you guys know, I know it's a big pump, but I don't see it getting much through 90, at least right now. I'm not doing anything with it. The chart's too messy. We went from one end to the other. I shorted up here. I bought down here. But now you're in no man's land, right? This secondary hit's not enough for me to want to go long. You can't go long in the middle of the range, and you certainly can't go short because you're not close enough to resistance. And God forbid something happens over the weekend. This gaps up to 92. So right now I'm not interested in it. If we went up to 94, 96 in a straight line, maybe it could be a short, but yeah, I would just be careful with oil. I'm just neutral on it. Obviously, big picture, longer term, I'm bullish, but right now, I would just leave it alone. XLE getting a nice bid. Again, really sloppy chart. You're back above those moving averages. That's a positive. Weekly time frame, still got to get above 90.51 on a weekly close. Then it can go higher. But right now, again, too sloppy of a chart for me to do anything with. XOP, nice pop. Still needs to get above this pivot here. A lot of resistance at 152. And then OIH, managing to carve out a small gain today. Yeah, so up 1.5%. And again, that weekly 20 MA held like a charm. I just don't like that big ugly gap that we put on it there. CCJ, so guess what, guys? I would not look to be long here. So we have, I don't even really care too much about that daily bear flag look. I care about the fact you close below that weekly breakout bar. So again, doesn't mean it can't get a bid or bounce, but to me, it's saying that it's tired, it's probably exhausted, and it may be done here, especially if you close the monthly below this, 35.90. So I would avoid it right now if you're long, trail your stop. And that's really all I would do with it right now. URNM managing to carve out a gain. Kind of the same deal on URNM, although it doesn't have that breakout bar like CCJ does, but it's still pretty extended on the weekly at best. This is looking for a weekly bull flag to let that 20 moving average catch up. So I would leave these sectors alone, or this sector alone right now. Based on that, that's a legitimate sell signal for me on CCJ in the medium term, just so you know. Nat gas pulling in a little bit. That still has a little bit lower to go. Had a nice pop, 25% in 5 days. That needs to pull back in. It's just doing some backing and filling there. All right, dollar index. So managing to carve out a gain. Still got some resistance here at 107 and then with a double top. We'll see how that behaves here next week. Again, this is why I won't short the dollar, because the trend is very strong on the monthly. And again, if there's risk off, it doesn't mean, don't think that like gold going up means dollar has to go down, or bond yields have to go up or down. Correlations can break down. If you have a true risk off move, the dollar and bonds and gold can all go up at the same time. So don't always think that it's got to be one or the other. Typically it will be some sort of correlation, but not every day. And dollar holding up right now, obviously due to geopolitical fears there. But levels have not changed. If we take out this green bar here, then we're still probably looking at 104.50, just so you guys know. All right, gold today, that was the star of the day, up 3%. That's a massive move for gold, in one session. Didn't close above the red bar high here, but still a really powerful move. I don't love the gap. I just don't like that. But, it's got a nice bid here. And again, I said the positives here for gold is that you've got that monthly green bar low, and that is held. So gold's getting a bid here due to geopolitical tensions on volume. There's gold futures. And it should have some resistance here in the short term at 1950. But that is a power move there for gold. You can see we actually back tested that wedge, and we're actually through it a little bit. So we'll see how that does next week. If these fears calm down a little bit, I expect gold to pull back in, just so you guys know. But it's looking good. Silver here through that blew through my minor resistance level. So just smashed it. $23 will be the next level here in the short term, and then 23.75, 24. But nice day there for silver as well. Platinum not doing a ton here, up 1.3%. Not convinced the low is in for that. Then palladium, same thing, looking for that to make one more low still. Copper rolling over, down 2 pennies on the day. I still think that needs to go test 340. All right, so Bitcoin still having an identity crisis here. It does not know what it wants to be, right? So if it's supposed to be the new gold, what's it doing today, right? So it's still acting like it's risk on, because even though it was green today, it was kind of down a little bit with the market. But bigger picture though, I don't like that close As you guys know, the other day, it's a failure. And, we've now closed below this head and shoulder neckline too. I would say near term, it may want to go to 26 and then 25 too. Bigger picture, weekly pattern is not strong. I don't like it. The monthly pattern is fine. That's the best thing you got going, but it needs to get going here kind of sooner rather than later. The longer it bakes in the oven here and doesn't move, the more bears can get a hold of it. All right, lastly, just to wrap up quickly, spiders here. So again, remember we closed below the August lows here on a weekly. So bears playing a little bit of defense, but there is room for a higher low next week. My levels here would be, again, 425, 428. That's kind of your pocket there that needs to get tested, I think. And then on the triple Qs, I'm looking for 360, 362. We'll see how it reacts there. Again, there could be news over the weekend. We could get a vol crush Monday if nothing happens. By the way, the VIX did tag 20 again. Actually, almost pierced the high. But again, those are the levels there I'm watching. It'd be really important to see if we can put in higher lows there or not. If we don't, then I think we could actually see one more pivot low before a major low for the remainder of the year gets put in. So anyways, guys, gonna wrap it up here. You guys have a great weekend. Come find me on carnivoretrades.com. Talk to you guys all next week.